Welcome to the Daily Update Podcast, where I'll go over the action in the market for Wednesday, November 19th, and we'll see how things look for Thursday, November 20th. The headline event was NVIDIA's quarterly earnings, released after the close on Wednesday. The report beat expectations decisively, and NVIDIA shares are currently trading up more than 5% in the after-hour session. That strength is carrying over into the S&P futures. As of this recording, the S&P 500 futures are indicated up roughly 1.25 to 1.3% overnight. For the first time in a while, we're seeing real hope for a bullish reversal heading into the Thanksgiving week. That said, caution is still warranted. The S&P 500, NASDAQ, and NASDAQ 100 all remain short and intermediate term negative as they're below their 50-period moving averages. Breadth and momentum indicators continue to deteriorate in many cases, and we have a confirmed Hindenburg omen still in the background. So while the NVIDIA reaction is undeniably constructive, the broader technical picture has not yet flipped back to positive. Recapping Wednesday's session. The cash session itself was relatively quiet, a modest gain of 0.38% for the S&P 500 on below average volume. The S&P did open higher, briefly cleared the R1 pivot near 66.65, but ran into resistance at Tuesday's daily pivot level and spent most of the rest of the day chopping sideways before closing slightly positive. Looking at the sectors, semiconductors were the clear leader and managed to recapture their 50-day moving averages, a positive development. Megacap tech and growth names held up reasonably well. Defensive areas, including utilities, staples, and real estate, lagged, which is actually consistent with a risk-on tone. Looking at the current technical picture, as stated earlier, the short and intermediate term trends remain negative. This is also evidenced by the ADX trend indicator, which is rising but still below 20, meaning there is not a confirmed strong trend yet. The long-term trend remains solidly positive. The indexes are still well above their 200-day moving averages, and a shorter-term anchored volume-weighted moving average continues to hold. Volatility is still elevated, with the VIX closing at 23.66, above the key 20 level that has historically been associated with negative annualized returns. Sentiment readings continue to be very pessimistic on a short-term basis, with a classic contrarian bullish signal now looming, but there still lacks strong positive confirmation. Looking at the key events in Wednesday's session, Wednesday did have the release of some employment-related data, which has been out of sequence. The economic reports are still playing catch-up from the earlier government shutdown. The entire economic calendar remains scrambled well into December, so expect continued noise and revisions. On the Fed front, the December meeting narrative has shifted dramatically in the past week. The market-implied odds have flipped from about a 90% probability of a 25 basis point rate cut now to about a 67% chance that rates will stay the same. That repricing is adding another layer of uncertainty. Looking at the current bullish case, NVIDIA's strong print and the overnight futures could spark a legitimate relief rally, especially as we enter the historically favorable late November and December seasonality window. Short-term oscillators continue to be negative but are showing signs of improving. And as stated earlier, the semiconductors are back above their 50-day moving averages. Extreme pessimism and oversold readings often precede sharp bounces, but we can't count on that until there is confirmation. On the bearish side, be careful of the pump and dump right at the open on Thursday, which is a gap higher at the open, only to roll over and close flat or even negative. Breadth still remains poor. The advanced decline lines are negative in the short term, and our smart money indicators are still negative. The dollar continues to strengthen. Missing or delayed economic reports keep the fundamental picture cloudy. In conclusion, the intermediate term trend is still negative. The long-term trend is still positive. Wednesday's modest gain and NVIDIA's beat have improved the near-term tone, but nothing has definitively flipped yet. Thursday's open and the follow-through, or lack thereof, after the NVIDIA reaction will be absolutely critical in the short term. A sustained move higher, pushing the S&P 500 back towards its 50-day moving average and ultimately 20-day moving average, would ideally bring things back to being more positive. Conversely, a quick failure to hold early gains would reinforce the defensive posture that has dominated over the past week to week and a half. Until we see clear evidence of either one, a legitimate bullish reversal with the indexes reclaiming their moving averages, or a failed rally that resumes the prior downtrend, our bias obviously remains cautious to negative. Thank you very much, and I will talk to you in the next podcast.